I've maintained an 80 to 85% win rate in 2024, regardless of wars, presidential elections, interest rate change, and market uncertainty. Every single trade tracked by thousands watching me live and thousands of testimonials from people copying my trades that I give live every single day. Look, if you've been finding for that one strategy to consistently withdraw hundreds of thousands of dollars a month like this, I hate to break it to you, but you're never going to find that one. Every single strategy has losing conditions, and the banks are out there to exploit the holes in your strategy and take every single cent that you have. The secret is to stay adaptable in every single season and recognize patterns during every economic cycle shift to always win and to never, ever have a losing month. If you don't know who I am already, my name is Nick, and I'm a 7-figure trader that tracks every single trade with 3,000 plus other traders live, and I've absolutely nothing to sell you. So in this video, I'm going to explore deeply these topics and how you can use them to never have a losing month again. I'll go through number 1, what is market seasonality? Number 2, what characteristics each season has? Number 3, I'll extrapolate for you the seasonalities on the daily, weekly, and the monthly time frame. Number 4, what strategies and time frames to use during their respective seasons. And lastly, number 5, what pairs are the best to trade during each seasons with examples. Now, the last one is going to be extremely crucial, so make sure you pay very close attention. Alright, so let's get your notebooks out and let's get right into the video. Number 1. What is market seasonality? Now, this is the understanding of general characteristics of price movements at a set interval of time period. Simply put, what price usually does at certain times. So, what can we learn from market seasonalities? Market seasonality revolves around the idea that price is divided into 4 different cycles, namely accumulation, manipulation, distribution, and continuation or reversal. Now, let's break this down and dive deep into the concept. These time cycles are fractal, meaning what is often used on a daily basis to identify high probability trading sessions can also be used to identify high probability trading days, months, and even potentially years. Before we get too far ahead of ourselves, let's dive into what each cycle means. Accumulation. This is where price is basically in a consolidation. In other words, where price is moving sideways. Manipulation. When price moves quickly to take out stop losses in the market. I'll explain more on this later on. Distribution. Price will then be distributed within the range that the manipulation has created. This means that it will look to reverse the move that the manipulation move has created, coming back into this accumulation range. Continuation or reversal. Price will either continue in the direction of the distribution or cause a reversal. This means that price has 2 ways of going. If price is bearish on the distribution phase, price could go lower, continuing the move, or price could come back up once again for a reversal. Number 2, what characteristics each season has. Now, this can be further broken down into 2 movement patterns, AMDX or XAMD. Just to remind you, that means that movement patterns are either accumulation, which is a sideways movement, to manipulation, which is a quick single directional movement to take out stop loss orders, to distribution, price coming back to a range within the manipulation candle, to continuation or reversal. The other movement pattern goes from continuation or reversal back to the standard AMD patterns mentioned previously. Now, here's the catch. The market usually follows these 2 movement patterns, but it does not always do that. You need to understand that trading is a game of probabilities, and nothing will always work with a 100% win rate. Look, we're not trying to predict the future, but rather understand how price moves most of the time and how to react accordingly. Think of it this way. If dark clouds are gathering, there is a high probability that it rains. So, of course, we have to hide under the shelter. Similarly, if price does A, we can expect that price is highly likely going to do B next. So, our job as highly profitable traders, yes, that includes you in the future, is to figure out what kind of price movements that you're currently experiencing and what is the most likely price action right after. This allows you to catch big moves with extremely little drawdown. Now, I'll explain a macro case now. Number 3, daily, weekly, and monthly seasonalities. Now you understand the big picture stuff and how price moves in general. Let's take a deep dive into real life charting. This part ties in what you learn with what actually happens on a daily basis in the markets, so pay close attention. Let's say the Asian session causes accumulation. So just to reiterate the point one last time, accumulation refers to a consolidation in price or ranging price action. Then the London open session manipulated price. As you can see, price moved higher to take out the stop losses right over here. The New York caused a distribution, reversing the bullish manipulation here, and the London close is either a continuation or reversal. In this case, a reversal happened upwards after the London close. Therefore, here you have a classic AMDX profile. Now, if you're brand new and you want to see this concept explained live on a chart, I stream twice a day here on YouTube. Feel free to check it out on this channel. We have another example here. When the Asian session has a continuation or reversal, we can see that London Open forms an accumulation phase. Then the New York session manipulates to the downside as seen over here, followed by the London close distribution phase, pushing upwards, creating higher highs, reversing the manipulation candle. XAMD. Now that we have got that out of the way, we can take this idea and zoom out. Remember when I said price is fractal? You can apply this to the weekly profile as well. Monday accumulates as seen over here. Tuesday to Wednesday manipulates upwards as seen right over here as well. Wednesday and Thursday distribute downwards, and Friday for the continuation or reversal, which in this case here, if you take a very close look, is moving towards the upside. Let's zoom out one last time and look at the yearly profile. January to March, we have accumulation. April to June, manipulation. July to September, distribution. And from October to December, we have the continuation or reversal. And in this case here, you can see price has decided to reverse. Once again, AMDX. See how this all ties in together nicely now? Here's how we start making money. Number 4, what strategies and time frames to trade? January to March, this is the yearly accumulation. I repeat, accumulation is the process of price ranging about, not breaking up or down in any direction. Within this accumulation, you can still catch some nice trending trades to either side due to the large range that we are playing in. There are 2 main strategies that excels in this condition. Firstly, if you're a complete beginner, this strategy is going to be perfect for you. During these months of the year, support and resistance is an excellent way to make money in the markets. Let's take a look at this example here. Price has created a support with multiple touches that has failed to break lower. You can look for confirmations to long the market, such as a simple candlestick pattern such as engulfing candles. The second strategy is an intraday trending strategy. To identify a strong trend, you can refer to key areas like your order blocks, fair value gaps, market structure shifts, change of characters, break of structures, and then take trending trades of those key areas. Look, I have tons of strategy on my YouTube channel. The ones that work best during these times of the year are going to be the strategies here. Time frame wise, I would stick with the daily and the 4-hour as your higher time frame. And for execution wise, you will be going down to the 1 hour, 15, or sometimes even the 5-minute chart for intraday executions. I have examples lined up for this video, so I'm going in depth, so understanding these concepts aren't a must right now at this point of the video. Moving on from April to June, the yearly manipulation. You'll notice extremely fast one-sided price action with almost no clear higher time frame retracements. You can use this same strategy as shared before. But in terms of time frame, we work with the 4 hour and 1 hour as your higher time frames. And execution wise, you will be once again done on the 15 or the 5-minute charts. As you can see, during this period on the lower time frame, price moved extremely one-directionally. On very high time frames, you will not be able to find any confirmation for a trade. But when you go down to the lower time frames, you can see a lot more details on price action, leading to higher quality confirmations. Now this will allow you to have extremely sniper entries. For July to September is usually the yearly distribution. Now this one here is going to be a little bit more special. The US dollar basically runs the foreign exchange markets. Why? Because it is the world reserve currency. The key thing about these 3 months is that most of the distribution will happen in September. Here's why. There are tons of USD bank holidays throughout these months. These months are called summer months, where price action on the USD tends to slow down because the central banks are celebrating a bunch of holidays. This reduces the amount of money being injected into the market, leading to a less volatile price action during these months. For July and August specifically, ranging strategies using supply and demand tend to work extremely well due to the consolidative nature of price. Alternatively, trending strategies can be used too on certain pairs, which we will talk about later on. The entries just need to be more refined. Your higher time frames, in this case, would be the 1 hour and the 15-minute time frames, with entries on the 15, 5, or even the 1-minute time frame. Now, for September, it is an extremely sentiment-heavy month because there is not enough volume to push the market up or down. Let's take this year for example. During September, we had a rate cut by the Federal Reserve. When the US has a rate cut, this weakens the dollar as it is an easier way for banks to loan out money. So investors turn to safer risk-off assets like gold to preserve a value of their money. So in summary, this is bullish for gold. Now, this is a trade that I took on gold at the all-time highs. On the 1 hour time frame, I noticed a bullish fair value gap over here. For reference, this is how the fair value gap was formed using these 3 candles right over here. After price tapped into the bullish fair value gap, I dropped down to the 5-minute time frame to look for confirmations. We can see that price has created a bullish change of character over here, but with a wick. Now, to further confirm that price action wants to continue bullish, I waited to create a BOS, a break of structure with a body candle close above this high right over here. Now, once this happens, I entered a buy on the retest of the bullish break of structure. Stop loss placement was placed below the 1 hour wick that tested the fair value gap. If price so decides to break below the 1 hour wick created here, there is an extremely high chance for price to continue lower, creating bearish market structure. Take profit wise, I targeted the 2625 level as it is a key psychological level. Now let's see how this trade plays out. As you can see, price went straight into profits, and as price approached 100 pips, I took major partials and shifted my SL to break even to go risk free. Now this trade here was called live, with over 900 people copying this trade. And here are the results. Now, for the last part of the yearly cycle from October to December, this is the yearly continuation or reversal phase. This time of the year, trading breakout strategies works the best. Now, what I would do is I would mark out obvious support and resistance levels. Once price starts to break out of it, I will drop down to the lower time frame to look for confirmations I mentioned earlier on, like change of character and break of structures to capitalize on breakout moves. Let's take a look at the 2023 gold chart for example. You can see I've identified ranges as seen over here, over here, over here, and over here. The moment price decides to break out of the range, price moves very smoothly either towards the upside or downside, giving us clean breakout trading conditions. Again, trending strategies work really well, be it on continuation or reversal. This is where you can revert back to the daily and the 4-hour being your higher time frames with your execution on the 1 hour, 15-minute or even the 5-minute time frames. We're now down to the most important part of the video. Pay close attention. Number 5. What pairs are the best to trade during each season? This is of course very subjective and not a one-size-fits-all approach. This is what I've personally found from my experience trading the several different markets and what has worked best for me. From January to March, anything goes. The markets are freshly volatile and you can trade pretty much anything, right? As long as you know what you're doing. Majors, crosses, indices, crypto, commodities, you name it, you can trade it. Why? Because there are usually tons of high impact news drivers present in the market during this time. From April to June, I personally focus on trading the majors, gold, and indices. News for other currency pairs tend to die down a little bit, but when there is news, I quickly browse through each cross pair to find out which pair have clear, clean levels that provides trade opportunities, and I'll execute based off that. This is where most traders get lost during the summer and winter months. Mainly during the July to August and December. I really want to focus on these so you can avoid losing absurd amounts of capital for no reason like I did when I first started trading. The thing is, your strategies that you have been using throughout the year work. You just seem to lose a lot more and take a lot more break-even trades because you simply don't know what pairs to trade and what time frame to use. So let's quickly go over why this is the case. Now, summer and winter months have low volatility. This is because several central banks and big players all around the world are on holiday during summer and winter. This would mean that volatility in the markets won't be as high. So what's the solution? Pick a pair which are more volatile with consistent volume injection for trending strategies and stable ranging pairs for ranging strategies. Let's first talk about summer. For trending strategies, I love to trade pairs like gold, Nasdaq futures, which is NQ, and S&P 500 futures, which is ES. This is the second strategy that I mentioned above just now, if you've been paying attention. Gold is a highly volatile asset and can still provide nice volatility injections year-round if you know what to look out for. I personally like to treat the 1 hour and the 15-minute time frames as my higher time frame. Meaning, I base the trade idea off these time frames. Then I go to the 15, 5, or even the 1 minute time frame for my confirmation. I'll give you a strategy that you can apply for both gold and the indices. So let's get right into it. Step 1. Go on the 1 hour time frame to identify your market trend and key points of interest. Step 2. Wait for your point of interest to be tapped and then you zoom into a 5-minute chart. If you are unsure what a point of interest or POI is, it is essentially a specific price level or area on a chart where you anticipate significant market activity. This could be a zone where price action suggests potential support or resistance, or where key patterns or gaps are present. Step 3. Look for a 5-minute unicorn setup, which is a breaker block plus a fair value gap setup. Set your limit order at the breaker block with stop loss at the breaker block high or low, targeting a 1:2 risk to reward ratio. Now, if you're not sure what a unicorn setup is, it is basically a breaker block plus fair value gap setup. I have a way more detailed video of this which I will pin right over here, but let's dive right into the first few examples. Next, let's take a look at NQ now. Let's go through the strategy yet again. Step 1. On the 1 hour chart, you can clearly see that we have a bearish market trend with premium arrays holding price down. Now, in simple language, it means that the market has been going down and there are key price levels where the market consistently finds resistance and struggles to move higher. These levels are like barriers that keep pushing price lower. Step 2. The most recent bearish fair value gap is our point of interest. Let's wait for it to be tapped. And there you go. Price action tapped it right over here. Just to reiterate, The bearish fair value gap is formed by these three candles over here. The gap between these three candles is the fair value gap, an area with a bunch of resting selling liquidity. We are essentially waiting for price to tap into this area of liquidity, collecting the orders here, and then continuing to go down. Now the last step here, step 3, wait for a 5-minute unicorn setup. And as you can see, we have it right over here. As per usual, stop loss above the breaker block high right over here, and we target a 1:2 risk to reward ratio. Let's see how this trade plays out. As you can see, price came into a little bit of drawdown and then dumped straight into our full take profit. Now, for trading indices specifically, you need to be really mindful of these rules. Number 1, avoid placing trades during high impact news events themselves. They usually induce a ton of volatility and could cause you to get wigged out, and nobody wants that. Number 2, if there is high impact USD news at 8:30 AM Eastern Standard Time, you can take a trade after the news events drops. If not, number 3, take a trade after the 9:30 AM New York Stock Exchange open. Market open volatility can cause you to also get wigged out of a position if you aren't careful. With that, let's move on to range trades. Months that range are usually August and December. For ranging strategies, I love to trade stable pairs like GBP, JPY. Both the pound and the yen are relatively stable pairs, offering many range setups, especially during the summer months, making it perfect for range traders. Now, here's a strategy that you can apply in 3 easy steps. Step 1. Look for a strong support and resistance on the 4-hour time frame. If you're brand new to trading, a support is a price level where a falling market tends to pause and possibly reverse direction because buying interest is strong enough to overcome selling pressure. It is like a safety net that holds price up. On the other hand, a resistance is a price level where a rising market tends to slow down or reverse because a selling pressure outweighs the buying interest. It is like a price ceiling that price struggles to break through. A strong support and resistance zone can be identified by tool rejection at both the support and resistance zones respectively. Step 2. Wait for price to come back to either the support or resistance zone to position yourself for an entry. Step 3. Wait for a 1-hour bullish engulfing candle at the support or a bearish engulfing candle at the resistance as your entry confirmation. Most people lose money and lose trades unnecessarily because they forget to wait for these key steps. So do not rush into a trade and wait for your confirmation to happen. A bullish engulfing candle is a strong reversal pattern that occurs when a small red bearish candle is followed by a large green bullish candle that completely engulfs the body and the wick of the previous red candle. This pattern suggests that buyers have taken control and it often signals a potential upward trend. A bearish engulfing candle, on the other hand, is a pattern where a small green bullish candle is followed by a large red bearish candle that completely engulfs the body and the wick of the previous green candle. Now, this pattern indicates that sellers have taken control and it often signals a potential downward trend. In this example, we have a strong support zone. Since price has trouble breaking lower than this price range, and the resistance here, since price has trouble breaking above this price range on the 4-hour time frame. We can note that this support and resistance area is strong because price has rejected this area off twice already. This is your step 1 done. Next, we have to wait for price to come back to the support area before starting to look for buy trades. And as you can see, it came back right here. Lastly, wait for a 1-hour bullish engulfing candle as our confirmation to enter. And as you can see, this is the 1-hour bullish engulfing candle. I look to enter the trade here with stop loss below the support area to protect against any potential price moves that could reverse and break the support level, signaling a potential change in trend. Take profit wise, I'll look to target the resistance because that is where price is most likely to face selling pressure and then potentially reverse. So eventually, as you can see, price crawled its way up, eventually smashing full TP for a nice swing range trade. Now, let's move on to winter. This is where my focus would move to the crypto markets.
Most of the volatility usually travels out of the forex exchange and the index markets and moves towards the crypto markets. Even then, the market still tends to range a lot during the winter months. So you can try to use the same strategy as the one I showed you for GBP, JPY on Bitcoin. So let's take a look at an example. Step 1. Look for a strong support and resistance on the 4-hour time frame. We have that right over here. As you can see, multiple different taps on the support. 1, 2, 3, 4. And of course, look at the resistance as well. 1 tap, 2 tap, 3 tap, 4 tap. Step 2. Wait for price to come back to the support level to position yourself for an entry. Step 3. Wait for a 1-hour bullish engulfing candle at the support for your entry confirmation. Place your stop loss below the support and target yet again the resistance. Now let's see how this price action plays out here. And as you can see, price proceeded to smash full TP. To wrap things up, let's review some crucial risk management principles. Always use proper stop losses to protect your capital and avoid emotional decision making. Ensure your trade size is appropriate for your account balance to prevent significant losses from any single trade. Remember, capital protection and preservation is key if you want to make it long-term in trading. Now let's talk about other common mistakes that new traders make with these concepts. Keep in mind that these seasonalities are just guidelines. Just because AMDX and XAMD allows us to anticipate setups with high probability, it does not mean it's going to work every single time. Trading in itself is a game of probabilities. High impact news events can often cause unexpected volatility and affect your trades. For a deeper dive on how to handle news events, check out our video on it over here. Also, be aware of common pitfalls with these strategies. Over-reliance on patterns without considering the broader market narrative can lead to very poor results. I've seen this happen one too many times already. Trader learns a pattern, works for them in theory, and then they try it on the live market and fail. Remember to always combine the technical analysis that we went through in this video with a solid understanding of market seasonalities and keep your trading plan flexible. Don't be a pattern trader.
Look, I understand that this is a lot to take in. Now, if you're still unsure of how the market seasonalities works, I strongly suggest you rewatch the entire video to truly understand the different market conditions that the market will provide you throughout the year to give you a higher chance of winning. Now, if this video has enlightened you in any way, shape or form, make sure to smash the thumbs up button down below. And for those of you guys here that don't know, I live stream every single day on YouTube, so make sure to subscribe down below to get alerted when I hop onto the live streams every London and the New York session. Now, do click the first link down in the description below to join our Telegram group where we send 5 analysis every single day to ensure that you guys can catch the same trades that I am personally looking at. Now, with that being said, use this new knowledge that you have just gained to destroy the markets, and I'll see you guys in the very next video. Nick signing out.